What we're going to be going over here is a job order costing system, and we're going to be looking at it from the perspective here of a manufacturing or a factory operation here, where you're manufacturing a particular product here and you're tracking it through as a particular job, or you're trying to determine the cost here on this particular job for manufacturing that product. Okay, so when you're talking about job order costings, you really have three different alternatives. You could either you look at actual costing, normal costing, or standard costing. And just for comparison purposes, I've have it here. So actual costing, you're looking at your actual direct material and indirect material. Again, actual direct labor and indirect labor. And then you have your actual overhead costs associated with the product here. All these are associated with the particular product you're manufacturing. But these actual overhead costs, usually you don't know the total overhead costs till the end of the period here, where you have to allocate them at the end of the period. So now what we're really going to be going over in this example here is normal costing. Again, you'd know your actual direct material and indirect materials, actual direct labor and indirect labor. But when it comes to your actual your overhead here, you're going to apply an overhead rate here. So you're going to have to estimate a certain percentage or amount of overhead that you're going to apply to this product here when it really occurs at a particular operation. So you're going to have to estimate a certain rate, and you apply it as the product flows through the particular operation. So you can see the difference here. With your actual costing, you really don't know what your total costs are until really the end of the period here for your overheads. But with your normal costing, you have an estimated or a pretty close cost, or an estimated cost that you're going to have applied for that product as it flows through the particular operation. So this is a more timely knowing your costs on a timely fashion here by using this applied overhead rate. And then if you look at standard costing, the only difference would be you'd be using a standard cost for your direct materials and indirect materials, and also standard cost for your direct labor and indirect labor, but you'd also be using the same applied overhead rate. Okay, so that's the three different alternatives, and we're going to really look at a normal costing system here. Okay, so let's go down and let's start with go through our materials here first. You would purchase those on an accounts payable, and you would credit some materials, total amount of materials purchased here for that job, and that's going to flow into our materials control account here, the material cost here. So you're going to look at your total material dollars here, and you might be making all these purchases here, but you're going to have to allocate them to the particular job that you're looking at. And then moving down here for our indirect costs, we're going to have miscellaneous accounts here, and we're going to gather indirect costs. It could be like depreciation, it could be support from particular labs and so forth for the product here, but you're going to have to determine all those indirect costs here. And really, they could be separated between variable plus fixed overhead. You may separate them between the variable overhead and fixed overhead, but nonetheless, they're lumped together here, and as I'm showing in other indirect costs. We don't always know when the operation is a product is going, or that order is going through a particular operation. We don't always know what those indirect costs are. So the question is, when do we know these indirect costs? But nonetheless, by the end of the period, we should know what these indirect costs are. And again, we could break them apart between variable and fixed overhead. But you have to lump them all together here, and they'd be moved into a manufacturing overhead control account here as those other indirect costs, as they flow in and we get to know and to allocate those indirect costs. We may not be able to allocate them till the end of the period, but nonetheless, they're going to flow into a manufacturing overhead control account. And then we're going to have our wages payable. It could be wages and salaries. Wages are usually tied right into the direct labor here for the product. Salaries may be office support and so forth, engineering support and that. So those wages, I got them as shown as a credit here to a payable account, and there would be the net amount that you pay for those wages and salaries. And they're going to flow into a manufacturing payroll clearing account here. This is where you're going to record your factory payroll here. Okay, so let's go up here and let's work with this materials account here. So now those materials that we've purchased here for this job, they can be separated between the direct materials used here And again, we have to have the indirect materials used. They're going to come out of some pool of materials here, but we're going to have to separate them between our direct materials we're used and the indirect materials used. So when we're talking about those direct materials, we really know what their actual cost is, and we know the actual quantity that we're using. They're tied right into that product. So those direct materials, when they're used here, we're going to credit our materials control account, and they're going to move directly into the work in process control account. We're going to debit our work in process control account here for the dollars amounts of the direct materials used. So that's what we're talking with our direct materials. We can identify those materials, and we know their actual cost here. So they move directly into our work in process cost account here. But our indirect materials, they're different here. We usually know their actual, or we can allocate their actual cost here, at least by the end of the period, the end of the year here. So it's really when do we know how much do we allocate to our indirect materials? Because they really aren't directly attached to the product, but the product has to be allocated some of those indirect materials. So it's a question, when are they used? When they're used here, can we allocate them, or is it sometime down the period? So what in the future here? So what we would do, again, credit our materials account here, but it's going to go into the manufacturing overhead control account. So we're going to debit our manufacturing overhead control account here for those indirect materials that are used. Okay, so that's really the difference. Direct materials goes directly into the work in process. Indirect materials, when we can determine when they're used here, and we really like to know the actual cost and the actual quantity. We like to know that, but nonetheless, they're going to flow into the manufacturing overhead control account here. Okay, so that takes care of our materials. Now moving down to our indirect accounts here. When we mention those are all those. It could be the variable plus the fixed overhead amounts, depreciation, what have you, support from other departments or laboratories and so forth, but to support that product. But they're going to have to be allocated, and the question is when. But nonetheless, there's going to be some actual costs that's going to flow into our manufacturing overhead control account here for those indirect costs. And when I mean indirect, they could be both fixed and variable overhead components here. Okay, so that takes care of our indirects here, or other indirects, or they're going to come in at some actual costs that allocated here to the manufacturing overhead. Now moving down to our wages and salaries, our wages payable, they're going to come into our manufacturing payroll clearing account here, and they're going to record the actual factory payrolls going in here. So that's going to be broken apart between our indirect labor that's used. These are labor. We're looking at the labor here. The indirect labor that's used here, but the factory payroll is going to be broken apart between the indirect labor that's used and the direct labor that's used here. And indirect labor could also be engineering salaries and so forth supporting it, but I've just broken it out as indirect labor. So what we're going to do here, again, the indirect labor is going to move up into our manufacturing overhead control account here, indirect labor use. So that's going to be part of our debit that amount here to our manufacturing overhead control account. And the question is here, we're going to try to bring them in at their actual cost. And the question is, when are they known here? When that particular operation is completed for that product, or some later date here when we actually assign or allocate those indirect labor costs here. Some of them may be known right away, indirect support like for maintenance department support or whatever for that particular product, versus direct labor for machining or something like that. So the question is, when are they known, and when do you allocate them? So do we know it when they're used? Generally not here, but sometimes you do. But nonetheless, this indirect labor is going to go up into the manufacturing overhead control account. Debit it, whatever amount you have in here is going to credit it out here in your manufacturing payroll, debit it, or increase your manufacturing overhead. Then the other thing is the direct labor that's used. That's when you're really working directly with the product here, like you're a machining operation, you're a machinist working on the product, then those direct labor hours here would be allocated to that product here. So you're going to know their actual cost times the actual quantity here. So direct labor used, that again is going to go to our work in process account here. For debit that here for the direct labor that's used. So you can see here, work in process, any direct materials and direct labor is getting credited direct or debited correctly to, or directly to a work in process, where the indirect labor and indirect materials here is going to the manufacturing overhead control account. So, all right, so we've taken care of our wages now. Now let's look at this manufacturing overhead control account. So this is where everything's happening here when you're talking about this in the manufacturing overhead control account and this work in process. So this is where we have to be really concerned with what's going on here with this job order costing. So we've accumulated our other indirect costs in here, and our indirect material that we used and our indirect labor that we used here. Now those are going to be totaled up here, and usually you don't know what all those costs are until the end of the period, or usually you're looking at the end of the year here, some point down the road here. But now what we do with this manufacturing overhead control account, when we actually the product goes through a particular operation or a particular department and it's being worked on, we apply a manufacturing overhead cost or rate to the product at the time it's going through that operation. So we'll look at that here. We'll get into it. But the big thing is, when we're talking about a manufacturing overhead account, we're going to have to wait until the end of the period here for our total indirect costs. We're going to have to total those up, and we're going to have to compare it to what we've applied here based on that overhead rate here during the period, or during when that actual product went through the particular operation. We've applied that rate, so we've accumulated that cost here. This manufacturing overhead is going to be credited out here, and it's going to go to the work in process account here. We're going to debit it to the work in process applied manufacturing overhead amount here when that product or that job goes through that particular operation. So we know that on a timely basis. When it goes through, it goes to the work in process here. So the big question is this applied manufacturing overhead. Let's go and let's understand what that is. So what we would do for the applied you're going to, at the beginning of the year here, you're going to budget some total amounts here, and it can be broken down between cost pools, that is departments, different departments within the factory that this product goes through, and so forth here. But you're going to have to come up with some budgeted dollars here for those, I'll call them total indirect costs here for the year here. And then it's going to be based on the budgeted direct labor here, direct labor hours, total amount that you're looking at for that department or that plant here for the year. So you're going to take those total budgeted indirect cost here, and you're going to divide it by the budgeted direct labor hours. So and you're going to come up with some rate, either a dollar rate here, or it'll be a percentage that you apply to your direct labor hours. That is being applied to the direct labor hours that is going through, being attached to, or being expensed to that product here. So what you're attempting to do here, this is really a predetermined or a budgeted indirect cost rate for each cost pool. What we mean by cost pool, that could be particular departments or machines that this product is going through, this particular job is using here. And you do it at the beginning of the year. So you've got some predetermined rate. It's really a close cost approximation that you're coming up with. So what you're going to be doing here for the particular product, and again, before we do that, it could be the variable plus the fixed overhead. You're just lumping those together here in a particular rate, or you could break them apart between the variable and the fixed overhead and apply it to the particular product here. But nonetheless, you're going to have to come up with some budgeted rate here. So to determine the particular cost for that product, you would take this overhead for the particular operation. You take the overhead rate here, either on a dollar basis or some percentage, and you take that times your direct labor hours. So it's all based on direct labor hours. So when that product or that job goes through a particular operation, you know the direct labor hours, you know what those are, you take it times the rate here, that variable overhead rate, or that overhead rate, not just variable, a variable or fixed, or the combination of the two here in overhead rate. So you may have different overhead rates here when we talk about, again, those cost pools. Those could be for the different departments that the job is going through, or the different machining centers, or what have you. But nonetheless, you're going to have to, just looking at it as a total here, you just come up with some usually you do it on a department basis here. So you're going to have some overhead rate for each of the departments that the product's going through, and then based on the direct labor hours used on that product in that department, it gets that different overhead rate. So if it goes into another different department, have a different overhead rate, different direct labor dollars here, or hours, excuse me, direct labor hours here, meant to say direct labor hours times that overhead rate, you're going to have an applied cost, or you're going to have moving back up here, you're going to have that applied manufacturing overhead cost. You know the cost here based on that overhead rate, that applied rate. Okay, so that's an estimate here. And again, and that's going directly in, that'll go into, you're credited out here in your manufacturing overhead count here for that overhead rate time the direct labor hours for the particular job here. And then that goes into your work in process here as applied manufacturing overhead cost. Again, this is at the year end. We're going to have to make an adjustment here because our applied costing here based on those overhead rates that that job or that product has here is going to be different than what our total indirect costs are here. So we're really talking about manufacturing overhead, looking at our indirect costs here that we're accumulating for the year here, and we're not going to really know that total amount till the end of the period. And then what we've accumulated those applied manufacturing overhead for that particular job here throughout the year. So we're going to have to make some year-end adjustments because of the difference here. But just following our work, let's go back to our work in process here. Okay, so we know what our direct material, what we've used here. We've got that applied manufacturing overhead, all those costs that based on those rates that we estimated here for the year, plus we know our direct labor here used. So taking all those direct costs here and this applied manufacturing cost here, to lump them together, and it's going to be become our cost of goods manufactured. So we would credit for all of those costs for that particular job that we have. We would add those together, and then that's going to be our credit to our cost of goods manufactured. And that cost of goods manufactured is going to flow into our finished goods as a control account here. From our work in process, the cost of goods manufactured for those total amounts flows into the finished goods control account here. So we would debit our finished goods control account here for those cost of goods that are manufactured. And remember, those include that applied manufacturing overhead rate. And then we're going to credit at the closing entries here, we're going to credit those the cost of goods manufactured for the cost of goods sold here, and then credit our finished goods for that, and then they flow into our cost of goods sold here. Debit our cost of goods sold here for whatever that amounts is. And then remember our cost of goods sold here, if we go up and we look at, that's going to be reducing our sales here. So we're going to have some sales or revenues account, we're going to have it credited for the amount of sales, and then associated with that we would have debit some accounts receivable here for those sales. And one other thing, we would have credited our accounts receivable for those wages and salaries, for the net pay for our wages and salaries. So that's pretty much our costing system. So when we come down to it here, this cost of goods sold here, that's where at the end here, based on those applied manufacturing rates versus our sitting in our manufacturing overhead account here versus what our total is here for those indirect costs here for the year, the difference here, you're either going to be underapplied, either we're going to have underapplied, we've not used enough overhead based on our total indirect costs here for the year, or we've used, based on our application here, we use too much overhead based on our total cost here. But what's going to happen here? That adjustment has to be made at least to our cost of goods sold here. At the year end, we have to make that adjustment. So we're either going to, if we over applied that overhead cost, we're going to have to reduce or credit our cost of goods sold for the amount that we over applied, or if we under applied that overhead based on our estimate here, then we'd have to debit or increase our cost of goods sold. But when we're looking at this applied manufacturing overhead, or looking at the difference here and how we allocate the difference between what we've applied here and our total end of period amount here for those indirects, there's really three different ways you can look at it, and let's just go over and discuss those right now, and we'll just briefly discuss them. Okay, so our manufacturing overhead year-end adjustment for over or under applied overhead, and we won't get into the details, but you got really three different alternatives. You could use the adjusted allocation rate here, either using a proration approach, or the direct write-off of cost of goods sold for any under or over applied overhead here. So the direct write-off is easy. It goes right into whatever you under or over applied, goes against directly into your cost of goods sold for a year-end adjustment. But these other approaches here, this is where it gets rather technical, but it's going to affect all your indirect accounts and how you manage those indirect accounts here. And you'd have to go and what you're really doing is you're going and you're recalculating that overhead rate here for the year. You're going to look at your total your total indirect costs here versus your total direct labors, and you're going to come up with that new rate here, that rate that you're doing, and you'd have to go and adjust your manufacturing overhead accounts, your work in process accounts, and all your other records here based on that new overhead rate. So you're going to have to make those adjustments, and then all those adjustments are going to really flow from your manufacturing overhead account into your work in process here, and into your finished goods, and then ultimately into your cost of goods sold. So there's different ways of handling this year-end adjustment here, but they get rather technical here, and that's really another discussion. Okay, so nonetheless, we've went through this job order costing here. The big item here is just looking at this manufacturing overhead control account and your work in process control account. So manufacturing overhead control account, you're going to have debited here for all those indirect costs here, plus those other indirect or your indirect overhead costs here. But what you've actually used here, what you would credit or you'd be using up, what you'd be moving out of your manufacturing overhead control account would be based on some applied manufacturing overhead rate. And that's applied here. When that job goes through a particular machining or particular operation in the factory, it gets that particular applied overhead rate for that particular job. So you know those costs right away here based on that estimate, and then those costs flow into your work in process here. And then remember, your work in process, it's really your direct materials that goes directly into your direct materials used here and your direct labor used here. But the indirect materials and indirect labor stay in your manufacturing overhead here, and then they get the difference between what you've applied here and your total at the end of the year here. Then those will really be adjusted, or they would go into this be adjusted. You'd be adjusting your work in process here, not to confuse it. Okay, so that's about it. So when you're dealing with this job order costing, you really dealing with a situation here where you have to determine a budgeted or applied rate here based on some labor hours here, and you usually, when it goes through a particular operation, there's particularly direct labor hours for that particular operation, then you use the applied rate on that operation, and that's where that's what's going into your work in process here. And if the difference again has to be adjusted here at the year end when we know all those indirect costs. Okay, so that'll summarize our discussion.